Choosing stocks to invest in is a critical financial decision that requires thorough analysis. This is an advanced strategy, and if you are a beginner, I suggest that you watch our other videos first before watching this content. This video explores various factors and strategies investors should consider when making stock selections. From understanding financial fundamentals to evaluating market trends, this guide provides a comprehensive approach to stock investing. The first step in selecting stocks is to write down your investment goals and understand your risk tolerance. Every investor has unique objectives, whether it's long-term growth, income generation, or short-term gains. Clarifying these goals will help you determine the types of stocks that align with your investment strategy. Risk tolerance is another crucial consideration. Some investors are willing to take on higher risks for the possibility of greater returns, while others prefer stable and less volatile investments. Your risk tolerance is assessed based on your current financial situation, age, and financial goal. As a rule of thumb, do not invest anything you are not willing to lose. You can do a quick risk assessment questionnaire from any broker-dealer site of your choice. They may have different variations, but fundamentally they are all working to get your risk appetite. Performing fundamental analysis is essential to identify stocks with strong financial health. This involves evaluating a company's financial documents, including its income statement, balance sheet, and cash flow statement. Key metrics such as revenue, profit margins, debt levels, and return on equity, ROE, provide insights into a company's performance and stability. It's also important to examine the company's competitive advantage and industry position. Companies with a strong market presence and unique value propositions are likely to perform well over time. Before performing fundamental analysis, I usually have 5 companies of my choice that I want to learn about. This makes it easier than trying to analyze all 7,000 plus companies in the stock market. The skill needed to perform the analysis mentioned is demanding. If you do not already have a background in finance, accounting, or economics, it would be in your best interest to start learning because your financial success depends on you understanding the basic terms. Let us know if you want us to create shorts explaining how to conduct fundamental analysis. Understanding valuation is another crucial aspect of stock selection. Stocks can be undervalued or overvalued based on their price relative to their earnings, book value, or other benchmarks. General valuation metrics such as the price-to-earnings, PE ratio, price-to-book, PB ratio, and dividend yield. Comparing these metrics to industry averages helps investors gauge whether a stock is priced fairly. It's also worth considering the company's historical performance and growth potential, as these factors influence future valuation. We have a rule of thumb when it comes to PE ratios. If a company does not earn that benchmark or above, we cut it from our shortlist of investment potential stocks. Analyzing market trends and economic conditions is vital for successful stock investing. The stock market is influenced by macroeconomic factors such as interest rates, inflation, and gross domestic product, GDP, growth. Investors should stay informed about current events and news that may impact the market. Industry-specific trends also play a significant role. For example, technological advancements can drive growth in certain sectors, while regulatory changes may pose challenges for others. Diversification is a key principle of investment strategy that mitigates risk. Instead of putting all your capital into a single stock or sector, consider spreading investments across different industries, geographies, and asset types. A well-diversified portfolio reduces the impact of poor performance from any single stock. While diversification can lower risk, it's important to strike a balance and avoid over-diversification, which can dilute potential returns. There are 11 sectors in the market, so choosing the consumer staples sector will give you stability alongside stocks from the energy sector. Especially as we go into the winter months, we'll project your portfolio to grow because as a nation, we use more energy during the winter months. Assessing the stock's liquidity and trading volume is also important for investors. Liquidity refers to how easily a stock can be bought or sold without affecting its price. Stocks with higher trading volumes are generally more liquid, making them easier to trade. Investing in highly liquid stocks provides flexibility, especially in volatile markets or when you need to exit a position quickly. Keeping an eye on technical indicators can complement fundamental analysis. Technical analysis involves examining historical price patterns, charts, and trading signals to predict future price movements. Indicators such as moving averages, relative strength index, RSI, and Bollinger Bands are commonly used by traders to identify entry and exit points. While technical analysis is more relevant for short-term trading, it can also provide insights for long-term investors. We can make a video on which indicators to use for quick analysis to determine the health and projection of a security if you request it. Monitoring insider activity and institutional ownership can reveal useful information about a stock's potential. Insider buying, for instance, indicates confidence from company executives in its future prospects. Similarly, institutional ownership reflects interest from large financial organizations, which often conduct in-depth research before investing. While these factors should not be the sole basis for decision-making, they can serve as additional data points. Insider activity always makes us cautious, especially if we see leadership selling off their positions. We are not going to be taken by surprise when the pilots have already left the ship to sink. Staying informed and continuously educating yourself about the stock market is imperative for successful investing. Reading financial news, following expert opinions, and staying updated with market reports can enhance your knowledge and decision-making skills. Investing in stocks is a dynamic process, and adaptability is crucial as market conditions evolve. As always, it's important to remain disciplined and patient throughout your investment journey. Emotional decisions driven by fear or greed can lead to costly mistakes. Instead, focus on your long-term strategy and avoid reacting recklessly to short-term market fluctuations. Regularly reviewing and rebalancing your portfolio ensures that it remains aligned with your goals and risk tolerance. Choosing stocks to invest in is a multifaceted process that requires careful planning, thorough research, and an understanding of market dynamics. By defining your investment goals, doing fundamental and technical analysis, diversifying your portfolio, and staying informed, you can make informed decisions that maximize your chances of success. Stock investing is both an art and a science, and with patience and discipline, it can become a rewarding aspect of your financial journey. Check out our other videos to learn more about how to become financially free.